Dave and Buster's Entertainment is one growth stock down 45% that I think you might regret not buying on this dip here. I'm going to explain why I think that's the case in this video, so let's begin. Starting with Dave & Buster's annual revenue, you see a nice upward trending line here that took a big dip during the pandemic because of course it was forced to shut down and people were not interested in going to Dave & Buster's restaurants and entertainment and playing the games that other people were playing, touching things other people were touching. So revenue collapsed, but it has since recovered stronger than it was before the outbreak at revenues of 1.964 billion. Also, this is where people are spending money right now. People are spending an increasing share of their income on away from home activities. People already bought things that they needed for the home during the earlier stages of the pandemic, things like flat screen TVs, new couches, new beds, new appliances, laundry machines, refrigerators. People overloaded on those things when they were stuck at home and they couldn't go out and spend money at restaurants and theme parks and travel and concerts and ball games. But now that economies have reopened, people are now unleashing pent up demand for away from home activities. And since they already spent money on things they needed at home, they've got a little more money to spend on those discretionary things now than they did during before the outbreak. So this is a big benefit, a big tailwind for Dave and Buster's Entertainment. You're starting to see that in the recovery with revenue way above where it was before the outbreak. Also, looking at Dave & Buster's, the company's done a good job increasing cash flow from operations. Again, it took a dip during the outbreak time, earlier stages of the outbreak when it was forced to shut its stores, but now it's recovering nicely as it's been able to reopen, and cash flow from operations of 444 million, way above the levels of before the outbreak where it was not reaching over 400 million in cash flow from operations. Additionally, looking at its operating profit margin, the company had done a nice job maintaining solid operating profit margins in the double digits. Again, similar story, took a dip during the earlier stages when it had to shut its stores and then shut its restaurants. And now that it's reopened, it's doing a better job operating profit margin, a little bit above where it was before the outbreak. So across the board, several metrics. Dave & Buster's Entertainment doing a better job. Revenue, operating margin, cash flow from operations, three vital metrics I look at before I invest in any stock. And Dave & Buster's has done a good job across the board on those metrics since reopening. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The final reason why I think you might regret not buying this growth stock on the dip here is because of the valuation. Dave & Buster's is trading at a relatively inexpensive forward price to earnings of 9.293, near the lowest it has been according to this metric going all the way back to early 2021. So you're getting a stock that's in a great position to benefit from this consumer unleashing pent up demand for away from home activities, and you're getting it at a relatively inexpensive valuation. So I think you might regret not buying this stock down 45% off its high at this relatively bargain valuation. All right, so that's all I've got for this video. What I have now, I've picked a video that's popping up on your screen right here. I think you'll enjoy. I've selected that based on your picking this video to watch. So please click on that video and I will see you over there. Thank you so much for watching. I really appreciate it.